a sense of capital. Aloha, ladies and gents. Welcome back to a new episode of A Sense of Capital Live Earnings. Your host of today, as always, is Julian, and I'm very glad to have you in. And guys, in 2 minutes, the webcast, the live call of cybersecurity company, data security and management platform out of the US, Rubrik, will be live. Yeah, again in 1 minute. So I just quickly check what is going on with the technology, if it's working. Yeah, it seems to work quite well, so I can take out my earplugs and directly jump into the earnings stream. While doing this, I'm making some notes and enter some data because I just arrived from holiday really just a few minutes ago. So everything is a bit right on time, a bit late on time actually, however it is how it is. I will do some notes and later on we will discuss the notes, the information of the report and everything. So yeah, take care, stay patient, listen to the call, and then we have together a good time afterwards while screening all the details which was provided by the management during the press release and earnings presentation and webcast, which will start in a moment together. Okay, so here is the webcast. Let me check if it's working.
Hello, everyone. Thank you for joining us, and welcome to the Rubrik second quarter fiscal year 2027 results conference call. After today's prepared remarks, we will host a question and answer session. If you would like to ask a question, please press star 1 to raise your hand. To withdraw your question, press star 1 again. I will now hand the conference over to Melissa Franke, Vice President of Investor Relations. Please go ahead.
Hello, everyone. Welcome to Rubrik's second quarter fiscal year 2027 financial results conference call. On the call with me today are Bipul Sinha, CEO, Chairman and Co-founder of Rubrik, and Kiran Choudary, Chief Financial Officer. Our earnings press release was issued today after the market closed and may be downloaded from the investor relations page at www.ir.rubrik.com. Also on this page, you'll be able to find a slide deck with financial highlights that, along with our earnings release, includes a reconciliation of GAAP to non-GAAP financial results. These measures should not be considered in isolation from or as a substitute for financial information prepared in accordance with GAAP. During this call, we will make forward-looking statements, including statements regarding our financial outlook for the third quarter and full fiscal year 2027, our expectations regarding market trends, our market position, opportunities, including with respect to generative and agentic AI, growth strategy, product initiatives, and expectations regarding those initiatives, and our go-to-market motions. These statements are only predictions that are based on what we believe today, and actual results may differ materially. These forward-looking statements are subject to risks and other factors that could affect our performance and financial results, which we discuss in detail with our filings with the SEC. Rubrik assumes no obligation to update any forward-looking statements that we may make on today's call. And with that, I'll hand the call over to Bipul.
Thank you, Melissa, and thank you all for joining us today. I'm pleased to report that our second quarter results were truly outstanding. Once again, we exceeded all guided metrics across top line and profitability. And this is not the first time. In fact, it is our 10th consecutive quarter of outperformance as a public company. And this quarter, we accelerated, yes, let me repeat, accelerated net new subscription ARR growth. This is a testament to the strength of our platform and the continued durability of demand for Rubrik's agentic cyber resilience. Here are the key numbers. First, subscription ARR reached $1.66 billion, growing 33% year over year. Second, net new subscription ARR reached approximately $96 million in the second quarter. Third, our subscription revenue was $407 million, growing 37% year over year. Fourth, our subscription NRR remained strong at over 119%. And I'm not done yet. Here are two more key numbers. Customers with 100,000 or more in subscription ARR reached 3,084, growing 23% year over year. And finally, on profitability, we once again made material improvement in subscription ARR contribution margin, up about 460 basis points year over year. We generated $66 million in free cash flow this quarter. Very few companies at Rubrik's scale can drive this level of growth plus expanding margins and a strong free cash flow generation. I'm pleased to report we are once again raising our outlook for the year. Let me start by giving you some context on how the market is evolving and what is driving our confidence in the future of our business. Needless to say, AI is the most transformative technology of our lifetime. What is fascinating to us is that the scale of productivity that AI creates is matched only by the scale of new risks that AI spawns. Mythos and frontier AI models are proving it every day. Rubrik is a participant in Anthropic's Project Glasswing. We built a complete harness to close the loop from vulnerability discovery to code patching. The reason I bring this up is because our Project Glasswing findings underscore our belief that we are in a singularity moment with AI and cybersecurity. As you might recall from my comments earlier this year, we are no longer in a world of human speed. A few years ago, humans were attacking us and humans were running our business processes. Enterprises have spent billions across thousands of security tools trying to detect and prevent those threats from materializing. These investments are not proving to be relevant anymore. Today, AI agents are attacking us. These autonomous agents use AI for vulnerability chaining to find the right malicious combination to intrude, breach, and encrypt at machine speed. If you have yesterday's cybersecurity tools with human speed response, you have a huge mismatch. And at the same time, AI agents are increasingly running business processes, workflows that assume identities, access sensitive data, and take autonomous action. Both threat actors and business operators are now agentic. We have witnessed vivid real-world illustrations of the unprecedented risk that these dynamics pose. This includes the recent Hugging Face incident in which we saw an autonomous AI agent exploit a zero-day vulnerability and gain unauthorized access to live systems, all without human direction. This clearly demonstrated both halves of the risk companies are grappling with: an AI-orchestrated attack moving faster than any human speed response, and an agent operating well outside the guardrails anyone intended for it. In this new reality, prevention and detection are no longer enough. At the same time, you can't fight AI with the same legacy software you have been using. What you will need is a new approach: preemptive risk assessment, real-time guardrail, and AI speed recovery. In short, agentic cyber resilience. No wonder businesses around the world are turning to Rubrik for agentic cyber resilience. We deliver Rubrik as an AI agent because an agent is the only way to respond to AI speed attacks. Rubrik as an agent is designed to autonomously collect, monitor, and understand information, create recovery plans, ask humans for permission, and create outcomes. Rubrik also has agentic governance and security built onto our platform to create runtime guardrails for agentic work. This is the same capability we are delivering to our customers with Rubrik Agent Cloud, which governs and secures our customers' own AI agents. As you may know, we operate two complementary product suites onto our single platform, Rubrik Security Cloud for cyber resilience and Rubrik Agent Cloud for agentic security and governance. These two suites map directly to the two-sided risk enterprises face as they adopt AI, assuming AI-powered breach and assuming agentic overreach. Let me first discuss our opportunity with Rubrik Security Cloud or RSC. Our proprietary preemptive recovery engine is the backbone of Rubrik agentic cyber resilience. Our architectural advantage, which combines time series data and metadata, allows us to continuously pre-calculate clean points of recovery across on-prem, cloud, SaaS, unstructured data, and identity before an attack occurs. Rubrik's preemptive recovery engine does the work in peacetime to be able to achieve recovery at AI speeds in wartime. This is how we deliver record-fast recoveries with RSC when our customers are breached or their agents get compromised. And this is why we continually deliver extremely high competitive win rates. Our cyber resilient data protection business continues to benefit from the ongoing transformation towards cyber resilience and consolidation to platforms, not point solutions. Amid an increasingly malicious cyber environment, customers increasingly view Rubrik's unified single platform approach to cyber resilience as a board-level mandatory requirement rather than a discretionary purchase. Customers can initially adopt Rubrik in many different ways: cloud, on-prem, unstructured data, identity, M365, agent cloud, but we initiate the same single policy engine on our single Rubrik platform. When a customer adopts Rubrik, they are not just buying a solution, they are stepping into an ecosystem where each additional product adopted makes all existing Rubrik products more powerful. This is a testament of a true platform built on complementary network effects. Let me share two of the many illustrative customer wins from the quarter. First, we landed a new logo deal with a U.S. state government agency which displaced its legacy incumbent after concerns around cyber recovery times amid the rise of cyber threats. The agency chose Rubrik for enterprise and M365 protection, noting our reliability, compliance fit, and the speed of cyber recovery. And second, we won a new Global 2000 financial services customer, displacing a legacy vendor and outcompeting a new-gen competitor. This customer selected Rubrik to protect its full data environment, including on-premises, data centers, cloud, M365, unstructured data, and identity, with Rubrik winning due to the strength of our cyber resilience capabilities across a single platform. In addition to cyber resilience, Rubrik solved for the customer's tool consolidation needs amid growing tech sprawl. Turning to Rubrik Flex, our unified platform contract vehicle, which we introduced at Forward in June. Rubrik Flex is one license, one contract, one commitment for complete agentic cyber resilience. We are pleased with the early reception and have already closed a handful of Flex deals. As an example, one of our largest expansion deals of the quarter was a Flex deal with a large US healthcare system, extending our platform beyond its existing on-premises footprint to cover M365, cloud, and identity data under a single enterprise agreement. This win came against cloud-native backup tools, with customers citing a single pane of glass across on-prem, cloud, SaaS, and identity data as the deciding factor for true cyber resilience. We believe Flex will become the default motion for our largest strategic accounts over time. Turning to identity, our identity resilience business continues to be one of the fastest growing product lines in the company's history. As you might recall, we started our identity journey with the release of Identity Recovery, which provides the rapid recovery of identity services following cyber attacks or operational failures. We then launched Rubrik Identity Resilience, which enhances risk posture by tracking misconfigurations and high-risk or malicious changes within identity services. We continue to rapidly disrupt the identity protection market with our recent announcement of the identity roll forward in identity resilience. With these capabilities, identity resilience now gives our customers the ability to recover identity systems to a clean current state without losing legitimate business progress and without leaving attackers' persistence behind. We have been building towards identity for years. Our recent acquisition of Strata Identity only accelerates it, bringing orchestration capabilities that makes our platform complete. There is nothing like this in the market. Let me share one specific example of an identity win. In the second quarter, we won an identity resilience, cloud data, and SaaS protection deal with a large online fashion retailer, displacing its incumbent native backup tools and beating out a point solution competitor. The customer chose Rubrik for its mission-critical applications across M365, Active Directory, and its e-commerce platform in Azure, citing our air-gapped immutable backups and speed of clean recovery in case of a cyber incident. Let me turn to Rubrik Agent Cloud, or RAC. As we have discussed in detail at our Analyst Day, RAC is built around three pillars: continuous monitoring and observability of sanctioned and unsanctioned agents, dynamic runtime security and governance through our semantic AI governance engine, or SAGE, and Agent Rewind, which allows our customers to surgically undo destructive agent actions. More recently, we unveiled Rubrik Agent Identity, the access plane for RAC. It governs who can do what with agents, which users and groups can use which agents, which MCP servers and tools those agents can reach, and what scoped access each individual tool call receives at the moment of action. Agent Identity extends existing identity infrastructure that customers already run and federate with Okta and Microsoft Entra ID. This brings user and group context into every access decision. Rubrik Agent Identity completes the RAC governance model. As a reminder, in RAC, we are building a complete agent security and governance platform across agent visibility, agent identity, agent runtime security, and agent rewind. This is extremely valuable for our customers as they don't have to buy point solutions from many vendors, then stitch them together by themselves. While early, we are pleased with the momentum of RAC and continue to see proof of concept engagements convert into production deployments. We now have over 15 and growing RAC customers. One of our larger RAC wins came from a longtime platform customer already relying on Rubrik for cyber resilience across on-prem, cloud, and M365 workloads. As this large retailer scales AI coding agents across engineering, the customer expanded onto RAC, extending the same platform it already trusts for recovery into agentic governance. The customer noted the appeal of Agent Rewind to undo destructive agent actions at machine speed and SAGE to secure those same agents in real time with AI. In summary, as I look back onto the quarter, three things stand out. Number one, AI speed breaches and agentic overreach are no longer hypotheticals. They are inevitable. Companies are waking up to a new reality that AI agents can and will attack at machine speed and increasingly compromise enterprise agents, resulting in massive insider attacks. This is exactly why agentic cyber resilience, not legacy prevention, detection, and recovery, is becoming the board-level standard. Number two, every part of our platform is compounding on the power of complementary network effects. Data protection, identity resilience, and agent security and governance aren't three separate bets. They are one flywheel. This quarter shows customers consolidating onto the Rubrik platform rather than buying another point solution. And finally, number three, the results prove the model, not just the moment. Accelerating net new ARR, expanding margins, and raised outlook show our confidence that this is a durable execution at a scale. With agentic AI adoption still early, our opportunity ahead is far larger than what we have captured so far. In closing, as always, I want to thank my fellow Rubricans for outstanding innovation and execution. I also want to thank our customers and partners for their continued trust, and of course, you, our shareholders, for your continued support. It is still early innings in this era of agentic cyber resilience, and I strongly believe Rubrik's best is yet to come. With that, I'm pleased to pass it over to our Chief Financial Officer, Kiran Chaudhary.
Thank you, Bipul. Good afternoon, everyone, and thank you for joining us today. We had a strong second quarter, exceeding all our guided metrics and demonstrating continued execution in the large and growing cyber resilience market. We are pleased to once again raise our outlook for the year. Let me start by briefly recapping our second quarter fiscal 2027 financial results and key operating metrics, and then I'll provide guidance for the third quarter and full year fiscal 2027. All comparisons, unless otherwise noted, are on a year-over-year basis. We are very pleased to have ended the second quarter with subscription ARR of $1.66 billion, growing 33% year-over-year. We added approximately $96 million in net new subscription ARR in the quarter. We did not see any material impact to our subscription ARR from rising hardware costs or supply constraints. As a reminder, we are primarily in the business of selling software either in the cloud or self-hosted. Moving along, our differentiated land and expand model benefits from multiple avenues to gain new customers and grow our footprint after the initial contract. Expansion occurs through data growth in existing applications, securing more applications and identities, adding more security products, or adding Rubrik Agent Cloud. As a result, we continue to see strong subscription net retention rate of over 119% in the second quarter. We are very proud of the high customer retention and expansion dynamics of our business. All vectors of expansion are healthy contributors to our NRR, highlighting the meaningful runway we have to more deeply penetrate our customer base. We ended the second quarter with 3,084 customers with subscription ARR of 100,000 or more, up 23%. These larger customers now contribute 88% of our subscription ARR, which continues to grow as we become an increasingly strategic partner to our enterprise customers. Customers with subscription ARR of $1 million or more grew over 57%. For the second quarter, subscription revenue was $407.2 million, up 37%. Subscription revenue in the second quarter primarily benefited from stronger ARR growth as well as more upfront revenue in the quarter, including higher RSCP and material rights. Material rights related to our cloud transformation contributed approximately $4.7 million to subscription revenue in the quarter, compared to $8.5 million in the prior quarter. Our other revenue category includes services as well as hardware sales in some regions, such as APAC, that have not been fully transitioned to our partners. In Q2, other revenue benefited from the higher price and volume of hardware due to business strength in those regions. Please note that our subscription ARR does not include sales related to other revenue. Total revenue was $427.3 million, up 38%. Revenue normalized for material rights increased 43%. Turning to the geographic mix of revenue, revenue from the Americas grew 33% to $299 million. Revenue from outside the Americas grew 52% to $129 million. Before turning to gross margins, expenses, and profitability, I would like to note that I'll be discussing results on a non-GAAP basis going forward. Our non-GAAP gross margin was 81% in the second quarter compared to 81.6% in the year-ago period. Our gross margin benefit from greater scale in our customer support organization, offset by lower material right-related revenue and revenue mix. We continue to expect gross margins in our long-term target range of 77 to 82%, as we discussed at our Analyst Day. As a reminder, we look at subscription ARR contribution margin as a key measure of operating leverage. We believe the improvement in our subscription ARR contribution margin demonstrates our ability to drive operating leverage and profitability at scale. Subscription ARR contribution margin was 14% in the last 12 months, ended July 31, compared to 9.4% in the year-ago period, an improvement of 460 basis points. The improvement was driven by higher sales, the benefits of scale, and improving efficiencies and cost management across the business. Free cash flow was $65.7 million compared to $57.5 million in the second quarter of fiscal 2026. The increase was primarily driven by higher sales and improved operating leverage. Turning to our balance sheet, we ended the second quarter in a strong cash position with $1.75 billion in cash equivalents, and short-term investments, and $1.13 billion in convertible debt. Let me now provide some context on our guidance. We are confident in our outlook, driven by the robust cyber resilience market, our differentiated technology platform, and the scaling of our emerging products, such as identity resilience. This momentum, coupled with our consistent and effective execution, positions us to achieve strong subscription ARR growth ahead. We plan to continue making operational investments across two key areas. First, we will continue to invest in R&D to accelerate innovation in the large but developing markets of data, security, and AI. Second, we will invest in our go-to-market, specifically targeting regions and verticals that we believe offer the most attractive ROI. These go-to-market investments will also focus on scaling our newer innovations, including our identity resilience platform and Rubrik Agent Cloud. Now turning to our guidance for the third quarter and full year fiscal 2027. In the third quarter, we expect revenue of $429 million to $431 million, up 23% or up 31% when normalized for material rights. We expect material rights related to our cloud transformation to contribute approximately $2 to $3 million to revenue in the third quarter. We expect non-GAAP subscription ARR contribution margins of approximately 14%. We expect non-GAAP earnings per share of 7 to 9 cents based on approximately 230 million weighted average shares outstanding. For the full year fiscal 2027, we expect subscription ARR in the range of $1.88 billion to $1.885 billion, reflecting a year-over-year growth rate of approximately 29%. We expect total revenue for the full year fiscal 2027 in the range of $1.685 billion to $1.693 billion. As a reminder, in fiscal 2027, the substantial reduction in material rights revenue will represent a meaningful headwind to our reported revenue growth. We expect material rights related to our cloud transformation to contribute approximately $18 million to revenue for the full year. Revenue growth normalized for material rights is expected to outpace our subscription ARR growth rate. In terms of profitability, we plan to continue to stay focused on capturing the market opportunity in cybersecurity and AI while balancing growth with improved efficiency. Based on our current investment plans, we expect non-GAAP subscription ARR contribution margins of approximately 15.5% for the full year fiscal 2027. We expect non-GAAP earnings per share of 47 to 53 cents based on approximately 228 million weighted average shares outstanding for the full year. We expect free cash flow of $323 million to $333 million. As always, we have included additional modeling points in our investor presentation. In closing, we are very pleased with our strong second quarter results and remain confident in our ability to deliver durable and efficient growth as a market leader in cyber resilience. With that, we'd like to open up the call for questions.
We will now begin the question and answer session. Please limit yourself to one question. If you would like to ask a question, please press star 1 to raise your hand. To withdraw your question, press star 1 again. We ask that you pick up your handset when asking a question to allow for optimum sound quality. If you are muted locally, please remember to unmute your device. Please stand by while we compile the Q&A roster. Your first question from the line of Saket Kalia with Barclays. Your line is open. Please go ahead.
Okay, great. Hey guys, thanks for taking my question here. I'll keep it to one. And maybe the question is for you, Kiran, a little bit of a housekeeping question. Can you just talk about how much ARR in the quarter, subscription ARR, came from the Strata Identity deal or just inorganic in general? I think there's some questions out there just around how big that was. So just for everybody's benefit, can you just walk through, how much of this quarter's ARR came from inorganic?
Sure, Saket. Thanks for the question. I'll just clarify here that in the most recent reported quarter, Q2, there was 0 ARR from Strata acquisition. And also clarify that in the guidance we provided, there's assumption of 0 ARR as well. So both 0 in the quarter, 0 for the year.
Very helpful. Thank you.
Your next question from the line of Fatima Boolani with Citi. Your line is open. Please go ahead.
Thank you. Good afternoon. Thank you for taking my question. Kiran, I wanted to talk to you a little bit about the guidance. You've seen a pretty remarkable degree of growth on a net new ARR basis year to date. And when I look at what is implied by your guidance for the back half, we're seeing a pretty material step down, essentially from something in the 20s on average down to mid-single digits. That's a pretty precipitous deceleration. So barring, some of the baseline conservatism that you always apply, I'm wondering what other factors that you are explicitly accounting for to have that be part of your thought process. And relatedly, what are some of the levers or, I guess, positive externalities that can transpire such that you can have a back half net new ARR growth performance that's comparable to, if not better than the first half? Thank you.
Sure, Fatima. So let me take the first part of the question. So obviously very pleased with the first half performance, including Q2. As you know, we accelerated net new ARR growth. And when I look at the guidance, we took the guidance up by the full beat in Q2, as well as raised some more. So totally, when you look at the last guide versus this guide, it's about 24 to 25 million higher. In fact, the net new ARR growth rate implied by the new guidance for the year is 700 basis points over the previous guide, went from 7 to 14%. Obviously, we run the business, as we have said many times, on an annual net new ARR basis, sales compensation as well. The plans have changed over the last year on an annual basis as well. So it's really the annual number we focus and run the business for. We have a multi-product motion with multiple products doing really well. And it's obviously the half time in the year. We still have 2 quarters to execute. Feel pretty confident about the numbers we put forward and the pipeline we have to execute it.
Just to add a little more color, Fatima, on this. If you look at where we started the fiscal year in terms of our net new ARR for the year, we have in 2 quarters, we have raised the net new ARR by 45 million, which is more than 10% from the beginning of the year number that we projected. And that is without any inorganic. I mean, as Kiran said, we added 0 ARR from a Strata acquisition, and the Strata acquisition is also not part of our projection. So 0 in the projection and 0 in the quarter. So we are accelerating our business. And if you look at this particular quarter, our net new ARR grew 35% year over year, which is a significant acceleration from our past quarter.
Thank you, Dr.
I'll just add one more thing, Fatima. This is Kiran. And we've talked about in the past as well, in terms of the cloud net new ARR. We obviously had a very successful run with the migrations. It is wrapping up this year. So when you look at the cloud net new ARR growth, as of last quarter, we were reporting out the adjusted number without migrations, and we grew 20% year over year in terms of the cloud net new ARR growth. We obviously provided that in the press release and the investor presentation as well.
Very clear. Thank you.
Thank you.
Your next question from the line of John DiFucci with Guggenheim. Your line is open. Please go ahead.
Thank you, and thanks for clarifying that, the Kieran. That is, I think, like I said, you already had, but I think it's great you said it verbally. Anyway, I look at these numbers and I see really good numbers here, and the acceleration is something that I don't think people see everywhere. They don't. But I have sort of a thematic question for Bipul. Bipul, you've been ahead of the curve. Your team, when the world changed as it pertains to the needs of backup and recovery, to not just be looking at time series data, but also the metadata, the application layer. And because of doing that, you were able to do other things that you might not have anticipated when you made that decision for different reasons. And it really seems like because of that too, you're also well positioned when it comes to AI, and you've explained that in detail to me, and I appreciate that. But as you point out, we're still really early with AI. Like, some companies have deployed agents, but they haven't done it en masse, and they really haven't done a lot of trying to secure them. I guess, where are you? I know you're well positioned because of where you sit and see all the data, and not only see it, you manage it. But where are you as far as the products, and will your products be ready when the world's ready, when all your customers need you?
Thanks, John. If you look at our strategy, we have 3 pillars of products, from data to identity to AI. And why are we doing AI? Because AI agents assume identity and work on sensitive data. And that's why you need to have a comprehensive agent security and governance platform as folks are adopting agents. As you know, businesses will have 2 kinds of agents. One is custom agent that is custom built for their business workflows. And those take time to build because you need to have harmonized data structures, harmonized ontology and context on the data before you can really design an agentic business processes custom to your business. But coding and search has become 2 widely adopted use cases within enterprise when it comes to AI. But when customers deploy these agents to do coding or search, they are worried about these agents taking destructive action or not following security protocols of the business. And that's why we focused on building agentic security and governance. But agentic security and governance, everybody is taking a point solution approach. We are taking a comprehensive approach from agent visibility, so telling what sanctioned or unsanctioned agents you have, to agentic identity, which actually gives you the control and access plane for that agent, so that at runtime through MCP proxy, we are enforcing only the right set of data is being touched by the right user. Then we have agent runtime security with our semantic governance engine, Sage, where we are looking at the agentic intent and stopping actions that are not aligned to the business process and rules. And then finally, agentic rewinds, that if agents take bad action, you can undo those actions. So we are taking a comprehensive approach to agentic security and helping our customers go on the agentic journey. They are mostly around coding and search so far. Just to give you a sense, one of a large U.S. healthcare technology firm bought Rubrik, and their CIO was involved in that purchase to ensure that their agentic usage is compliant. And they were worried about, since it's a healthcare company, they were worried about data leakage and compliant with the healthcare data. and with our Rubrik Agent Cloud, they will be able to securely expand agentic uses across the organization because they now have both ability to secure the access in runtime, understanding the intent of the agent, as well as the ability to rewind. So these are the kinds of things our customers are coming to us, just like we have delivered data resilience and identity resilience, we are now delivering AI resilience.
So it sounds like you're there. You're ready. It's just when they're ready, you're ready. Is that accurate?
Exactly.
Got it.
Exactly right.
Thank you. Thank you.
Thank you, John.
Your next question from the line of Greg Moskowitz with Mitsuo. Your line is open. Please go ahead.
Great. Thanks very much for taking the question. I echo John's sentiments that it was important here and just to quantify and reiterate the net new cloud ARR growth of 20% year over year, very healthy. That being said, it was still, fairly well below the total net new subscription ARR growth. And I'm wondering, Kieran, if you could walk through the dynamics behind this, as well as what your high-level expectations are going forward for the mix of cloud versus other ARR growth. Thank you.
Sure, Greg. I can clarify that. So what I think we spoke about the previous quarter as well. We have a cloud business as well as a non-cloud business. And the non-cloud business is largely directed towards folks who are in the regulated industry, government agencies as such on-prem, who do not want to use the cloud. And that business has started to grow. Obviously, we went through a period of migrations when there was a piece of the non-cloud business which was moving to cloud, but that has largely been done now. So going forward, you'll see the non-cloud business grow as well. We saw that last quarter. We're going to see we saw it this quarter and going forward too. So the total net new ARR growth for subscription ARR is going to be a combination of the cloud as well as non-cloud.
Just to add a little bit of a color, Greg, given the geopolitics and given all the things that we are seeing around the world in terms of security, every country is now concerned about containing their supply chain and economic infrastructure. And as you can imagine, digital infrastructure and AI infrastructure is an important economic infrastructure. And that's why folks are working on digital embassies and containing data, containing infrastructure in their own sovereign realm. And this whole sovereign cloud and sovereign infrastructure is actually driving some trend towards non-cloud Rubrik sales. And that's what you see around regulated industries, sovereign sensitive industries, defense, government, and overall geopolitics concerns is driving non-cloud sovereign deployments.
I'll also add, Greg, that there's ample demand in both these markets, both the cloud and the non-cloud. So we run the business on subscription ARR. That's the primary metric we focus on. And the mix of cloud, non-cloud will play out depending on the quarter. We have given some modeling points to guide for the second half in terms of cloud, non-cloud contribution, which should help you with the modeling.
It makes perfect sense. Thank you both.
Thank you, Greg.
Your next question from the line of Eric Heath with KeyBank. Your line is open. Please go ahead.
Great. Thanks for taking the question. Bipul, question for you, high level on the demand environment. We're hearing commentary and seeing your results as well, but hearing commentary about a post-Mythos inflection. So can you just talk about the incremental demand you're seeing for cyber resilience or RAC in response to Mythos, and maybe how that's starting to materialize in the quarter or the outlook? Thank you.
Thanks, Eric. So we have been saying for the last 6-7 years, saying prevention and detection of cyber attack is not sufficient. Folks have to assume breach and prepare for cyber recovery and cyber resilience. And Mythos and frontier AI models have been a huge inflection point for our industry. What Mythos has demonstrated is the vulnerability chaining will make low priority vulnerability into a P0 problem. And as a result, and these models are so smart that there is no real time between intrusion and breach. So you cannot stop breaches. You cannot detect or prevent pretty much anything if the vulnerability exists. So the real strategy is fast recovery, what we call machine speed recovery, and patching without human intervention. So the whole industry is now aligned to our original vision of assume breach and deliver machine speed recovery. So we are seeing acceleration in terms of the customers coming to us, having concerns about Mythos deploying cyber resilience capability that can deliver preemptive recovery engine, which delivers AI speed recovery. That's the conversation. And so that's the first part of the agentic cyber resilience where AI is attacking you. At the same time, your agents that you're deploying in your enterprise can get compromised, and that could lead to a significant insider attack. So folks are also worried about resilience for these AI agents, and that's why we have a complete agentic resilience platform with Rubrik Agent Cloud that delivers both security and governance of AI agents.
Thank you, Eric.
Your next question from the line of Keith Bachman with BMO. Your line is open. Please go ahead.
Yes, many thanks for taking the question. And Bipul, I wanted to ask, and Kieran too, on RAC, and just trying to gauge expectations. And I'll break it into a few different pieces. And so first part is on competition. When I hear the message on RAC, particularly around governance, it sounds a lot like what the identity providers are suggesting, not on the access piece, but on the governance piece. But I just wanted to hear your perspective on where you think you're going to face competition. The second part is just on the 15 customers, are those paying customers? Could you just clarify? And then more broadly, the final piece of expectations is you've conditioned us to not think about RAC really contributing ARR this year, but should we be thinking about ARR, given all the activity surrounding agentic risk, can that contribute ARR in calendar year 27 or your next fiscal year? That's it for me. Many thanks.
So let me start by giving you where we are. So yes, we have more than 15 paying customers for RAC. And we are seeing a strong proof of concept to production deployment trend on RAC. You talked about the competition and noise in this particular market. Yes, there is competition for point solutions. So observability companies are providing visibility into agents. Identity companies are providing access and governance into agents. Pretty much not many people are watching intent of AI agent with AI. That's unique that we brought into the marketplace. And obviously, agentic rewind is our heritage. So if you look at Rubrik's strategy, instead of having our customers buy 4 or 5 point solution and stitch them together to have complete visibility and control on AI agents, they could buy Rubrik platform, which has visibility, identity, runtime security, as well as agent rewind, all on a single platform. So we are taking a very long-term platform approach because we believe that this particular market requires comprehensive platform because the risk with agents are very high. And we want our customers to deploy agents with confidence and get the benefit of the productivity that AI delivers.
Keith, this is Kiran. I'll just add that we're very pleased with the progress so far, but the focus here is on finding the right product market fit and making our customers successful. So there's minimum assumption of RAC in this year's ARR, and we'll keep you updated as the year progresses.
Okay, many thanks.
Thank you, Keith.
Your next question from the line of Todd Coupland with CIBC. Your line is open. Please go ahead.
Todd, you may be on mute. Next question, please.
Your next question comes from the line of Junaid Siddiqui with Truist. Your line is open. Please go ahead.
Great. Thank you for taking my question. Kiran, you mentioned not seeing a material impact to your business from rising hardware costs or supply constraints. But are you seeing a measurable increase in displacement opportunities where customers are reconsidering more hardware-dependent backup architectures? And could the current pricing environment create a more durable share gain opportunity over the next couple of years?
So, Junaid, just to give you the market and product sense, Rubrik does have a product that utilizes our customers' existing infrastructure to deliver cyber resilience. Having said that, we are a software company and we are in the business of selling software, and our customers have the opportunity to deploy cloud data protection across their many vendors that they might have in terms of their hardware supply chain. Plus, if you look at where our business is today, Rubrik is not a point solution on data center. That is a smaller part of our business. If you look at our overall business around cloud, M365, identity, and rack, all of the products that we are selling. So that's the reason that we have no material impact from hardware cost rising or supply chain issues. Kiran, you want to give some?
No, I think just to reiterate, enterprise protection is a smaller part of the business. We had shared some data at our Analyst Day in June as well. So just in terms of the scale of that business. So we're a multi-product company with different avenues for growth, and customers can protect data across different workloads in the cloud as well as on-premise.
Thanks, Junaid.
Thank you.
Your next question from the line of Param Singh with Oppenheimer. Your line is open. Please go ahead.
Hi. Thanks for taking my question. I wanted to kind of dive a little bit more onto the identity resilience side. Want to understand how ubiquitous is the adoption of that across your install base today, and do you think that's an incremental opportunity to penetrate other customers, or are you leading with it? Thank you for taking my question.
Thank you, Param. So if you look at data security, the risk on the data security comes from user interaction on data, that is your identity. And that's why we built the complete identity resilience platform. It's still early days for us in identity, and penetration in our customer base is still very early. Obviously, we started with identity recovery as the first product, and then we built identity resilience that brings the risk aspect of the identity. And in that risk aspect, misconfigured identity, privilege escalation, sensitive data exposure because of the privilege escalation. And this is where we bring the DSPM flavor into identity. And we have a significant opportunity with identity. Just this quarter, we closed the largest international identity deal in Rubrik's history with an existing customer. The customer had the requirement of recovery in hours, and their current solution was recovering in days, like 7 days. And so this deal was a very high priority CIO, CISO level deal, and Rubrik Identity Resilience provided that solution to the customer. So as you can see, identity data and the whole AI resilience, we are delivering the complete package to our customers to be ready for Mythos or whatever comes next.
Understood. Thank you.
Thank you.
Your next question from the line of Shrenik Kothari with Baird. Your line is open. Please go ahead.
Hey guys, this is Zach on for Shrenik. Thanks for taking our question. And so, one distinctive part of the Rubrik story really has been your ability to organically build successive businesses, cloud, SaaS,
now identity, while still selectively using acquisitions to accelerate certain capabilities. And so really, as the opportunity broadens across identity, AI, et cetera, would love to hear how you guys are thinking about the build versus buy prospect from here. And maybe are there any areas where the speed or data advantages increasingly makes M&A more attractive, maybe than just the organic incubation model? Thanks.
Thank you. In terms of Rubrik's strategy, we always took a platform strategy because we believe that the complementary network effects of the Rubrik platform is very powerful to our customers because they are not just buying a solution from Rubrik, they are entering into an ecosystem of solutions where each additional product that they buy from Rubrik increases the value of all existing product that they already have with Rubrik. And this is the power of our platform. So we always take this approach that we want to look at teams, technologies, products that we can bring in and integrate into our platform so that our customers continue to have a seamless experience. Having said that, we are not dogmatic. We are always looking at new opportunities with the lens saying, can we accelerate our roadmap? Can we accelerate our customers' journey to AI, customers' journey to more of AI transformation? And so we are always looking both organic and inorganic. But so far, we have found opportunities where we can accelerate our roadmap by finding teams, technologies, product to build into the Rubrik platform.
Great, thank you.
Thank you.
Your next question from the line of Gray Powell with U.S. Bank. Your line is open. Please go ahead.
Okay, great. Thanks for taking the question here. And congratulations on the strong results. So I just want to make sure that I understand one of the points that we often get from investors. And if I'm looking at your guidance and the model points in the deck, it looks like non-cloud ARR should be growing around 10% this year, give or take, whereas in prior years it was declining. And I know everybody likes to focus on cloud ARR, but like all else equal, isn't growth in non-cloud a good thing? Like, is there any difference in the gross margin profile or the expansion potential of these products? I guess I'm just asking because I'm a little bit confused why people tend to overly focus on the cloud metric.
This, Karen, so that's a great question. And I think earlier on the call, I answered as well. For us, we have two businesses. We have a larger cloud business, which is represented by the cloud ARR, and a smaller but now growing non-cloud business as well. We started our cloud transformation where we started building cloud products and marketing them about a few years back after several years of deep R&D, which really allows our customers to manage data sources wherever they sit, cloud, non-cloud, and SaaS applications, all from the cloud. But we also understand that there are some regulatory and geo requirements for which customers would want to self-host. And we respect that. And Bipul talked about earlier, there's an opportunity in sovereign clouds, in governments, and in some regulated environments as well. So we will serve those markets fully as well. So you should expect that both these businesses are growth drivers. But we focus on a total subscription era. Really the mix at this scale, we are 89% cloud. Maybe there's a little bit more in terms of contribution, but for us, both are important businesses, albeit the non-cloud business smaller. I would say obviously from a margin perspective, the non-cloud business would have a higher margin because the customer is self-hosting and we are not hosting it for them.
Okay, that's really helpful. Thank you.
Sure.
Okay.
Your next question from the line of Rudy Kessinger with D.A. Davidson. Your line is open. Please go ahead.
Hey guys, thanks for taking my question. I want to double click on maybe just what you're seeing from the hardware standpoint. Obviously, you said there's no overall impact to the business of the quarter. That's evident in the numbers. You also had mentioned you had sold some higher hardware in APAC, I believe, to some customers. So just what are your customers seeing from a lead time standpoint, relative to 90 days ago? And how are they navigating, instances where they can't procure that hardware and going about deploying your software in those instances?
Yeah, this is Kiran. I can answer that. So as we mentioned in the prepared remarks, there was no material impact from hardware pricing or supply chains on our subscription ARR, and that was the case the last quarter as well as the quarter before. So we saw the same phenomenon this time as well. On your question on lead times, actually, we are not in the hardware business per se. There is a small portion of hardware which we sell, and that's largely in regions which are smaller, like in some regions in Asia Pacific. And we did see lead times actually get better from the start of the year, but no material impact to subscription ARR.
Thank you, Rudy. We'll take the last question.
Your last question comes from the line of Joe Vandrick with Scotiabank. Your line is open. Please go ahead.
Thanks for taking my question. Bipul, maybe for you, can you help us understand what's driving the strength in your identity resilience business today? And is that demand primarily, is that incident driven? Is it proactive? And are these mostly greenfield deployments or are these competitive displacements? Thanks.
So as you know, hackers are not breaking in, they are logging in, because identity has become the weakest link in cyber attacks. And once these attackers get in, lots of times they actually destroy identity systems or do a ransom or encrypt the identity systems or have long-term persistence in the identity system, and that becomes their host to attack other places. So identity systems have become also ground zero for cyber. And so customers are looking for identity resilience to understand misconfigured identity, identity recovery to recover after a cyber attack. Also, if you have persistence in terms of the malicious identity, you want to roll back and roll forward identity system and roll forward only legitimate identity changes so that you can bring back your identity system in a clean state. So this has become a significant problem. Historically, only regulated industries, customers bought identity recovery systems. And now with cyber attack and on the rise and everything else that is happening, particularly now with Mythos and other AI models, identity has recognized as a significant weakness. So we are seeing both brownfield as well as white space customers that never bought identity resilience or recovery, they are buying into it. We are very excited about this market. We identified this market early, built onto our same platform that is giving data protection with identity. And now we are connecting the dots across data, identity, and AI. And so that's the power of the platform we are bringing to bear to solve this problem.
Okay, thank you, Jim.
There are no further questions at this time. I will now turn the call back to Bipul Sia for closing remarks.
So thank you everyone for joining us today. I truly appreciate your time and questions. We are very excited about agentic cyber resilience and the opportunity ahead of Rubrik. As I said in the prepared remarks that these are early innings for Rubrik. The best of Rubrik is yet to come. Thank you so much. Talk to you soon.
This concludes today's call. Thank you for attending. You may now disconnect.
Yeah. Un momento, let me close the call. It's closed. Okay, guys, I'm not sure if you recognize it, but I'm already getting kind of tired. Not because of the results or whatsoever. I mean, obviously, if it would be up 20 or 30% the stock price, then I would maybe be a little bit more awake. But yeah, I was on the road like 14 hours today. Did holiday in Spain and France. So I will keep the next, what is left, let's say like this, quite compact, let's say, at least considering how long I regularly take. But this time I will start with my notes regarding the earnings call, the web call, which just happened. And wait un momento, like this. Okay, you can see. So first of all, what definitely flashed in your eyes is that you can see now the after hours price, and it's below 8%, roughly 8%. And when the call started, it was more like 10% and 10 to 11%. So it seems like on the first glance, the reactions by the market is positive. Not sure if it's completely driven by the performance of the CEO and CFO of Rubrik, but from my perspective, they acted very professional and confident. And honestly, there wasn't that much new. I mean, it's not a full year guidance, full year call, just a second quarter call. And I mean, what they should tell new. Yeah, so questions are primarily the same. Always asking for, okay, what is the impact by the increased pricing of hardware costs and this and that, and I mean that's nothing new. So yeah, what was new? I think they replied quite confident. That is reflected now by the higher after hour stock price. I mean, relatively high. It's still down 8% roughly. Yeah. However, I focus a bit more what was essential, relevant, at least from my perspective, and there wasn't that much, honestly, I think, so what they've mentioned, that there's the Rubrik security cloud and there's the agentic security cloud, and they mentioned they have already 50 customers, 50 if I understand correctly. So it's nice to hear they ramp it up. I mean, it's obvious that companies are not pushing agentic AI that heavily right now. Yeah, I mean, they're pushing it, but it's more like whatever, some kind of bots getting utilized and software and programs and add-ons and whatsoever, like Microsoft Copilot, but really true autonomous agents active in, for instance, logistic company, planning some kind of logistical processes autonomously, or in the financial space doing accounting work or whatsoever. I think that is not that 100% regular, and all the companies and even enterprises are using this. But however, it's nice to hear they have this volume of roughly 15 customers, digging the experience and yeah, getting hands-on experience. Yeah, I think that's very essential and quite a confident answer actually, so customers adopting to it and doors are open. They mentioned it's in general this agentic security cloud is very competitive approach. There's a lot of focus on it, but on the other hand, they see really, and I like this, that they focus this wording a lot of times. It's an own ecosystem, yeah. So, I mean, as you know, that the companies, the cybersecurity companies nowadays, which are alive and are large and have own ecosystems with different kind of directions, yeah, and functionalities they offer. And basically modules, how they call this. And here we have this 2 or 3 major areas, like data protection, like identity security, and of course agentic AI. And they see it really as a flywheel, as an ecosystem, and I think that's exactly the approach they must go for. I think what is a bit tricky for investors to understand and to create trust in the market is that people need to understand or ask, or at least I asked this by myself and I read about this question a few times for sure in the World Wide Web, is why not cloud providers and hyperscalers providing this kind of security add-on solution, cyber resilience, whatever, by their own? It can't be that tricky, it's multi-billion companies. And why not Okta doing, like Okta cybersecurity, identity security company, why they not doing it? Or, I mean, identity security, SentinelOne has identity security, CrowdStrike has identity security, Palo Alto Network has identity security modules, which you can purchase. So, I mean, they think maybe there's a big risk that what Rubrik is doing, they can duplicate it very quickly and maybe even improve it. And so, yeah, basically because they have an ecosystem and they can do up and cross-selling and provide a broader tool set, Rubrik is somehow set out for strong risk, and to eliminate this kind of perspective, I think it's really important that they carve this kind of ecosystem, and they make sure, okay, we have an own ecosystem. It's not like only others have, and our solutions are already that specific, that unique, and that secured, and our customer base is that strong that we basically deploy and install an own ecosystem. Yeah, and yeah, that is important. It's not a one-stop shop for one solution, but for many, and I like it. I think it takes time, and it will not be done by one earnings call based on the numbers and based on the words the CEO and the CFO use. But ecosystem, I think it's very important wording. This flywheel is very important, and always repeating data protection, identity security, and agentic AI. I think it's important that people need to understand it, and I like it. That's a very clear message from my perspective as an investor. I mean, I'm a quite strong backholder. It's my largest position, or maybe the largest one. I think it's somehow the largest. Not sure what is going on with the after hours price, but it was, at least at the evening when I arrived here, the largest position with roughly 80,000 euros, or what is it, like 90,000 US dollars, something like this. However, I like this very much, and because when they make it clear with these 3 directions and 3 key modules they deliver with the ecosystem, I think there is not that much room to just go out and just put some stuff under the table which wasn't successful. I mean, these 3 major modules must be successful, and I think they will be successful. And it's very kind of easy to measure Rubrik based on those 3 major fundamental pillars, So again, data protection, identity security, and agentic AI. This is what we need to take care of, and I hope each of those 3 pillars create an own kind of ecosystem. I mean, they already mentioned there's agentic resilience and agentic rewind and whatsoever. I will never be an expert with this, with really the technical details. I don't want to lie to you guys. I'm not a cybersecurity expert or whatsoever, an analyst or any similar. But yeah, there's I think an ecosystem in all of this hidden, and I hope they dig the full potential. Yeah. However, again, based on the answers on the questions, the reply was very strong. I mean, at the beginning they mentioned that there is again no impact or low impact on the capex. It's a software business, not a hardware business, so that's not new. What they've mentioned, and we will see this later in the slides as well, that the net recurring revenue rate was in Q4 120%, then more than 120%. Yeah. So it means like what you get out from an existing customer, including upselling and cross-selling. Yeah. So selling new products and selling the products you already sold a little bit more intensively. So people are using it more, customers are using it more. So again, let's say they make $100,000 last year. Now they make, with 120% NRR rate, $120,000. That's the meaning behind it. So again, past quarter, Q4 2025, it was more than 120%. Now, past quarter, it was 120%, so a bit down. And now it was more than 119%. So it's decreasing, and that is something I don't like that much. I will talk about this later very quickly, but this is what he has mentioned, and yeah, I think 190% is still quite high, but we want to see it stays higher and maybe even increasing again up to more than 120%, because there's really just a low number of companies like Snowflake, for instance, who can keep this kind of momentum and have loyal customers and utilize them. So yeah. We want to see that modules getting active and customers really going for all solutions: data protection, identity security, and agentic AI. Okay, then they have mentioned that year-on-year growth, and that was quite impressive, I think. I mean, USA revenue growth was 33%. Very solid, I think, a bit below this 38% of full year growth, revenue growth. But they've mentioned that rest of the world was 52%. That is lovely. I mean, they just has announced, I think, a few weeks ago that they will build some kind of an office headquarter whatsoever in London, I think, for roughly 500 million to cover EMEA, so Eastern Africa, Europe, and wait, give me a moment. Check. Wait. I just need to read the comment regarding if the 500 million is correct. Yeah, here. EMEA. So Europe, Middle East, and Africa. So the London office will take care of those 3 regions. And I mean, it makes perfect sense. You can see 52% year-on-year growth. I like the diversification aspect. I think past quarter they have mentioned that 68% or something like this of the revenue getting collected and covered by the US, and I like more diversification, so more rest of the world business, and it seems like it is on track. And then just a few answers what have been important. I mean, they mentioned they had an acquisition past quarter of Strato AO. It's an identity security company, and analysts ask, okay, what is the impact on the quarter results of this year of the forecast, and as well on the full year forecast for 2026. And Beeple, the CEO of the company, mentioned no impact, not considered at all. That's lovely to see. So maybe there will be some add-on in the future. Then they mentioned already what I've mentioned, that's 50 agentic AI security cloud customers. And what they've mentioned as well, what was interesting, I mean, it's not that surprising, but someone asked, okay, so how is identity security going? It's developing well, and Beeple, the CEO, mentioned everything is going well. Actually, they acquired the biggest deal in the identity security history this quarter. It's very lovely. I mean, I think past quarter they mentioned quarter-on-quarter growth is 38% with roughly, I think, 50 million ARR. So they really try to achieve this first goal of 100 million. I think next year, mid next year latest, they want to achieve it. So that is lovely, yeah. And in general, don't forget, guys, and I already opened this when we talk about all the results, but before I forget it, they always pushed some additional modeling points, as you can see here behind the quarter and full year guidance. And in general, that is what they already mentioned past quarter. It's quite backloaded in terms of second half, and especially fourth quarter will be a strong quarter. So no need to panic. I think, again, I already mentioned this in the chat. For me, it's a little bit more like a technical reaction by the market after hours. Now it's down by 6.5%. You know, it was down by almost 11% or even more, I think. You can already see that it's recovering, and numbers, I think, are quite solid. Not sure if they're rock solid, but yeah. But however, the call was solid for me. And again, that the price is again a bit more up than before speaks the truth, kind of. And now we dig into the Excel sheet and check out what is going on with the results. You know, I mean, obviously press release and presentation slide deck is ready. And I copied already the results. And yeah, we go through them. And we always start with top line growth and bottom line growth, so revenue and profit growth. You can see I always compare it, so Q3 2026 to Q3 2025. Same with Q2, Q1. You know, so try to eliminate some seasonal effects. You know, again, historically, in some business, for instance, the fourth quarter is the strongest. And yeah, then it's not always that reasonable compare Q3 to Q4. I always do Q4 to Q4 most of the time. Okay, so what we have here is one-time revenue and one-time the actual revenue and the forecast revenue. The actual revenue, you can see 38% growth. I mean, guidance was 396 million. I want to see something like 419 million roughly. And we get 427 million. So strong beat. You can see compared forecast to the actual revenues, 31 million more. So 1 year ago with 28 million more beat was already strong. Or you can see here quarter on quarter development, 31 million. Now it's 40 million. So on a relative number and on the absolute number, very, very solid. And that is very positive for me. On the other hand, the forecast is lower than I expected. I already checked it, and I think that is already kind of a bumper. Let me check who asked the question. Shadow asked in the chat function, and guys, please use the chat function. I love the interaction. He asked, why did it go down despite good earnings? And this is the first aspect from my perspective. The guidance for revenue for the upcoming quarter. I mean, yes, it's still guidance for 34%, but it was, I made the note, I think guidance past quarter for Q1 2020, for this quarter was like 40.4% if I'm not mistaken. So it seems like a bit low compared to past quarter guidance. Still not bad. Again, I mean, it would not be surprising if, look, they guide 34% and they will go again for something like 36, 37%. So it will be kind of a beat and very solid, yeah. So I don't have big problems with this, but as you know me, I always like the forecasted guidance more than actual results, and this is for me negative, honestly, because again I expected more, and that is positive. So however, we have overall a neutral rating when we talk about revenue, which is kind of surprising for me because I definitely expected I will leave a green rating today, but yeah. So there we have already the first hiccup, let's say like this. I mean, it's not even that small. I think revenue guidance is very important. But yeah, again, the company is very strong in sandbagging, and we started, I think, with 24% revenue year-on-year growth in Q4 guidance for Q4 2025, guidance for 2026, and now we are at something like 29%. And you can see first 2 quarters have been very, very strong, 35% and more in terms of year-on-year revenue growth, and now it will be again more than 35% very likely. So they will readjust their full year guidance for revenue 2 times more very likely. And yeah, this is how they kept it as well during 2025 full year. So yeah, expectations look very juicy from my perspective. So let's see what's going on with profit. And we have here guidance was $0.04. And they achieved $0.20, and look, I want to achieve $0.28. Maybe it seems a bit much, but it was this $0.12. You can see here 1 year ago, development from Q1 to Q2 2025 was $0.12, and now it's only $0.04. Yeah, I mean, it's positive and it's up, and it's not about being profitable at the moment, but yeah, I don't like it that much. And then we have forecast, and you can see forecast is target is now $0.08, the core target, and I had target of $0.21, and here again you can see it went up to $0.17 1 year ago, Q2 to Q3 2025, and now only up $0.04. Yeah, so that is a bumper. Again, I mean, yes, it's developing right, and who knows what will be the actual results and profitability. Again, I think company is not in the stage where now profitability is that important. I think company gets profitable, best case 2028, base case 2029, worst case 2030, 2030. That's my expectation, my assumption. So what the heck? Who cares what is going on right now? Obviously some, but as long as they're not burning tremendous amount of cash, everything is fine. However, the profit results for this quarter, and here I need to be strict, no matter if it's about the actual results or the forecast, for me is a miss. And so I leave negative, oh, wrong box. Negative rating, yeah. So far so bad, not that great, guys. It is how it is. And now we dig a bit deeper into the details. Looks like a lot of information, but we will go through it as quick as possible. Net revenue retention, we already talked about it. I mean, you can see it was always, now you can see it. Un momento. You can see always more than 120% in the past 2 years, but past quarter it went down to only 120%, and now they tell a little bit more like, that is actually correct. More than 119%, yeah. And again, I'm not. It's, I mean, find 5 companies with this kind of revenue or ARR volume, with this kind of NRR, so net revenue retention. That's very difficult. It's very challenging to find something like this. But again, yeah, it's getting down. I keep it neutral. I really don't like that it's getting down. Believe me, guys. That's really the last thing I like to see. But however, it's really not the worst case from my perspective. And it's still on an absolute number quite high. And then we have ARR, very important number, most important number I would say. Most important number I would say, guys. Yeah, keep that in mind from my perspective, because ARR, annual recurring revenue, that's the future. It's for sure way more important than revenue in terms of SaaS, at least from my perspective. And that is a SaaS company, obviously. We want to have this stable and reliable source of income, of revenue, and can predict by checking out the ARR very good the future development. And of course it's an all-time high, but you can see really, and that is what he mentioned at the beginning 2 times, and he told something like, and I repeat, we are re-accelerating ARR. And I think that's a very important number the market is missing a bit, yeah. Whatever is in the details, and yeah, sometimes the devil is in the details, yeah. But check this out, yeah. I mean, 32.6% ARR growth past quarter to 32.8% ARR growth year on year. So Q2 2026 to Q1 to Q2 2025. That's solid stuff. I mean, that means that it is still very, very likely. I mean that again, this year they finish revenue growth year on year with something like 35%. Would not surprise me, and for sure it would not surprise me because of this ARR growth that they achieve another 30+% year on year growth next quarter, and that means I'm very, very, very solid revenue, guys. I mean, let's say they achieve what is the guidance right now? 1.7 billion, roughly, and now they do 30% growth. You can see what it is. Wait, I did the math. Here you have it. So something like 2.2 billion revenue at the end of 2027. Yeah, so upcoming year. It's not unrealistic, and that is lovely. That is lovely, at least based on my math. So this ARR, and again, keep in mind in software and SaaS, it's very important. So that's a big plus. It's a big plus, yeah. And then we have 100,000 ARR customers, so the larger ones. They have a big share of it. I think roughly 90% of those are of their customers are large ones or larger ones, yeah. And you can see past quarter went up roughly 24% and now 23%. I honestly think it's still quite stable and solid. I mean, look, when you see net new 100,000 AR customers this year, This quarter 138, and 1 year ago only 124. I think it's really solid. But yeah, it's decreasing. Hard to tell. Honestly, I think it's even green. Yes, it's getting lower, but just by 0.6%. And really, I mean, this kind of companies, again, they have the ecosystem, and it's important for them to really address this well and make sure customers are utilizing it, especially the enterprises, large enterprises with a lot of potential in terms of getting and adding value for them by using Rubrik solutions and products suites. Yeah, but in general, and of course they have a lot of spending power. Yeah, they have just a lot of financial power enterprises, and so I think it's really important that I mean, and not sorry, and I think there is a lot of potential that they do up and cross selling. Yeah, just based on this, and therefore they need this the fundament are the customers. And if they already achieve something like more than 20% year-on-year growth with new customers, and on top of it, they make sure that you can see this NRR stays high, and they do 20% more with the existing customers plus getting new customers. That's a creamy, juicy, delicious dish, yeah, at the end, if you want to say it like this. And so I think that's very solid, yeah. That's very solid. And the customer base growing 23% is actually positive, yeah. Unfortunately, to those numbers, they didn't provide any information. Hopefully next quarter, or at least I didn't recognize it. Then we have 2 KPIs, which I created by myself. Yeah, and that's the revenue per 100,000 plus customer. So we really want to see what is going on, how efficient they use their customer base. And then we want to see ARR per customer. And I mean, that's very highly depending on how is the ARR developing, obviously, and the revenue, and of course the customer base, because this is what you put in ratio. You can see revenue per larger customer is definitely an all-time high. Past quarter it went up by 12.3% year-on-year, now by 12%. I think that is okay. That's solid, and I rate it neutral. What is nice to see is, even though the ARR customer growth, the large ARR customer growth is solid, I like to see, look, past quarter it went up by 7.2%, but because of the strong ARR growth, you can see now acceleration to 8% roughly. So nice to see. So, I mean, strong spending customers a lot of times are happy customers, satisfied customers. And I like to see this. So that's very good. And then we have gross margins. So we take a look at the profitability. And you can see past quarter it went up by 2.2%, and now it went down year-on-year by 1.1%. You can see it's, yeah, one of the lowest ones in the past 2 years, and definitely lower than the 3 quarters ago with 78.4%. So I think that's negative. Even if that's not the end of the world, but I need to be strict here. And then we have the subscription ARR contribution margin. That name stated by itself, that's an important number for the operation leverage. Contribution margin, I need to read this by myself, but I made the note so I can tell you what it is. Contribution margin means it's basically the ARR, so the annual recurring revenue, minus or deducted by the cost of goods sold, like cloud infrastructure, support, customer onboarding, and sales commission, for instance. And as well minus sales and marketing costs, and then deducted again by ARR. And basically the result you can see it like this. 30% plus is very, very strong. It indicates that there's a scalable model with efficient customer acquisition. Yeah, it's really about, again, costs of goods sold and sales and marketing. It's really about how much you spend and how efficiently you can acquire new customers and address your products. Yeah, and let's see what is going on here. So for them, it's a big number. You can see past quarter it went up year on year by 5.2%. Now it went up by 4.6%. So still growing. What they actually mentioned, and that is what I want to highlight. That is the comments of past quarter earnings presentation, and they mentioned we expect, you can see it here, Q2 subscription AR contribution will be down Q on Q from Q1 2027 due to timing of expenses. We expect subscription AR to move modestly higher sequentially and then higher in Q4. So actually they expected it's getting lower, but look what happened, yeah? That's the reason why we check this stream together and the earnings result. You can see it went up by 0.8%, yeah? So they expected it went down, but it's up, yeah? And it's an all-time high, and that is, guys, for me, very positive, something which I would not want to miss, yeah? So it seems like they're pushing forward very efficiently. That's nice. And then we're taking a look on the cost side of life on the expenses, and we have here general administrative. And you can see big reduction. That's nice to see. Past quarter already down year on year with -4%, and now -8.5%. By far the lowest one with 13%. Straight green. That's nice to see. And I mean, it's very regular that at a certain point of time, G&A getting down at SaaS companies. You know, if they do acquisitions or whatever, they just getting efficient. I mean, they're getting, especially if they have a high NRR like Rubrik, they're just squeezing out more money and more profit per staff member, for instance. And so yeah, that's very regular. And here we have sales, marketing, research, development. These numbers are a bit more like investments, especially research and development. But as well as sales and marketing, it's about being competitive. It's about getting market share, and it's about being really securing the market for them. And you can see past quarter it went down by 11.2%, and now it went down by 6.2% year on year. Doesn't sound bad, but you can see it basically increased from past quarter. It's still the second lowest number, but it's a regrowth, and I don't want to see this, yeah? I don't want to see it, and therefore I rate it negatively. And then we have research and development, and here I can accept a bit more when it's growing or whatsoever, but you can see again, past quarter it was more or less neutral with 0.2%. Now it is actually stable year on year with 0%, or the absolute number 29.7%. Research and development expenses share on a GAAP base in ratio to revenue. Yeah, so you can see it's reacceleration. It's one of the highest numbers, actually, the fourth highest number in the past 2 years. I don't like this either. I mean, I know it's an investment. I know it will pay off, and I know they know why to do this. I mean, look, it's an absolute number. It's $127 million. I can't think they can afford. They have a very good cash balance. Positive free cash flow. Everything else is going well. So not why go for this. Yeah. So it makes perfect sense. I mean, look, I can't tell they should go for a good ecosystem. I love the strategy, but on the other hand, really complain about sales, marketing, and especially research and development. But however, it would be lovely if somehow it's getting down, and that's not the case. And then we have another two last very unique KPIs I've created, and that is first an KPI which measures a bit, okay, what are the costs to keep the customers, and then what are the costs to get new ones. And you can see here, past quarter it went down by roughly 1%, and now it went down by 15%, yeah? So that is lovely. They're really getting efficient. So it's a bit like this contribution margin, if you want to see it like this, because you can see I basically put the number of 100,000 ARR customers in ratio to general and administrative costs and 50% of research and development. Yeah, so that is what I see. I mean, it's of course not one-to-one the reality, but at least it's kind of indication, especially when you compare it over the quarters. And yeah, you can see it's went down very, very strongly. And that's lovely to see. I mean, they're making more money per customer. Yeah, that's what we have seen here. And on the other end, they're paying less to keep them. And that's, yeah, again, that's nice. We keep it positive for sure. And then we check out what is going on with the acquisition expenses. And here we consider sales and marketing, 100% sales and marketing, and 50%, the other 50% of research and development. And you can see past quarter it went up by 14%, and now it went up by, ooh, that's a bug. So now it's correct. Wait. By 13.4, so a bit less than past quarter year-on-year growth, but for sure an all-time high. I mean, not that surprising if you check out what is going on with sales and marketing and research and development. So straight negative, very easy call. Yeah. And now to check out what is going on with the rest of, or what is left in terms of profitability. So net income margin and free cash flow margin, net income margin or the gap base. And it's still in the red for sure. I mean, you can see past quarter it went up roughly 26% and now only 17% year on year. Yeah, it's the second best, let's say like this, but again, it's still negative and it's re-accelerating negative, so I put it red. And free cash flow margin, past quarter went up 7% and now it went down by 3.2%, so 15.4%. It's actually, you can see it's the third lowest in the past 2 years. Not nice at all. And again, if someone is asking, like Shadow in the chat, okay, why is stock price down? Yeah, maybe because of this kind of details, yeah. Profitability is not looking that crazy good. Again, contribution margin, yeah, okay, solid. And in general, it's nice to see that they adjusting positively adjusting the full year guidance. But yeah, free cash flow margin, net income margin doesn't look that crispy. And obviously there has an impact as well on Rule of 40. I'm not rating this, but I stated at least, I show it here because some of you are interested in compare companies with each other based on the Rule of 40. And when you do this, you can see that, yeah, it was already higher. Everything above 40 is good, yeah, regularly at least. Yeah, but you can see past quarter it went down 3% and now it went down year on year roughly 17%. So honestly, that's not that strong, that's not that convincing. And yeah, another red. Yeah. And then we have stock-based compensation share of revenue. I think very important number. Competitors like, I mean, it's not a competitor, just another cybersecurity company. So company like Zscaler, which is as well, again, a cyber vendor, cybersecurity solutions vendor. They, I think, are a lot of times struggling very heavily with high stock-based compensation and not decreasing that quick enough. And yeah, here it's not that strong. I was invested in companies which are having stronger SBC, but you can see past quarter it went down by 7.4% and now by 5% roughly. So yes, it's not the highest number, but it is higher than past quarter. And I really want to see it's getting down. I think it's very important for the stock price. I could understand if analysts don't like it. And so yeah, I leave it negative. So yeah, very mixed picture so far, I would say, yeah. But actually a little bit more negative than positive for sure. And now we check out what's going on with full year guidance, and I think that is very, very important. And you can see here on the left, let me see if you can see it. Yeah, that looks good. You can see that this here have been the numbers basically in Q4 and Q1. Yeah. So, and that's now the current ones. and you can see very clear development. So revenue, full year guidance at the end of 2025 was 1.6 billion roughly. Then it went up past quarter to 1.64, and now it went up to 1.69. So almost 100 million more revenue target, which is awesome. Yeah, you can see it started with, I have no clue how much it started. Wait, let me check. I can do the quick math. So it started, if I'm not mistaken, with a guidance of 22%. Sounds a bit low, but yeah, it might be the case. And then went up to 25% and now to 29%. So that is awesome. That's very important. For me, again, the future is very important. I want to see numbers developing right. And yeah, it looks like this. Then we have ARR and same story basically. Wait, let me check this again. So it was like at the beginning 26%, or yeah, roughly 26% growth, then 27% growth, and now 29% ARR growth full year. That is really, really strong in my perspective. Guys, I need to take a quick break. I will be in a moment back, yeah? Just give me a quick break. Sorry, guys. 2 minutes and I'm back. So, okay, guys, that's live. Sorry. Okay, let's go on. And thank you very much for staying patient. Where we stayed. And now, so far, full year guidance adjustments very, very strong. And then we have earnings per share on a non-GAAP base. And I think that's by far a very, very, very strong uplift. You know, you can see guidance started with 17 US dollar cents, then went up to 30 US dollar cents, and now to 50 US dollar cents. I mean, yes, it's non-GAAP and whatsoever, but look, no matter what is here going on with the expenses and the margins and whatsoever, guidance is solid, and that is nice to see, you know. It's sometimes a little bit more confusing, yeah, and suspicious if the results are better, but the guidance not getting adjusted for full year, yeah. And here's the opposite, you know. Some of the results are not that convincing, like the current earnings per share results, but they raise up the full year guidance, which shows or somehow means that it is not unlikely that again it's very backloaded, and the third quarter and especially the fourth quarter will be very strong, you know. That's nice to see. That's full year guidance for me very important, you know. Then we have the subscription ARR contribution margin, and yes, here as well it went up, you know. You can see past quarter 14%, before it was 13%, and now 15.5%, so another strong increasement by 1.5%. Lovely to see. It's again not something like 20-30%, so there's still solid room for improvement, but nice to see. And then we have free cash flow margin. That is, I think, very important, yeah. You can see we start with roughly 16%, went up 2% to 18%, and now another roughly 1.5% to 19.4%. So very nice. Would not be surprised at all if it's more than 20, even 21% at the end of the year. So that's really, really nice, because again, it's full year guidance. It's very likely that the third quarter they readjust as well the results, and then they beat the forecast in the fourth quarter. So yeah, again, more than 20, even more like 21%, it's not unlikely. And then we have the weighted average shares outstanding, and that remained unchanged. You can see past quarter it went down a bit, which is nice. We want to see a lower number, obviously, because that means shareholder dilution. And now it stayed stable on 228 million. So I don't want to judge about this. Obviously, it's quite some shareholder dilution. Yeah, it's for sure. But it's at least not worse than past quarter, let's say like this. Yeah, but you can see full year guidance very, very. And I mean, that are essential numbers. Yeah, next to customer base, for instance. Yeah. ARR is essential number, subscription ARR contribution margin is essential number, free cash flow margin is essential number, and all of them are very positive, you know, guys. And so yeah, we have a really mixed experience, what I didn't expect. Yeah, we have revenue again neutral base, the actual revenue is very strong, but the forecast is kind of weak, even though ARR looks good and full year revenue forecast looks good. Yeah, so I would not be affected that strongly by it. Let me check one more time. Wait, I want to check if the 40% is really correct. What I've mentioned, 40% forecast in year development. This is the sheet of past year. Yeah, and was 40.4%. Of past quarter. Now, however, it is how it is. So it's just 34.4% year-on-year growth. So again, revenue and profit. I think overall this is, and for me revenue is a little bit more important. This is neutral to negative, something in between, a little bit more neutral maybe. And that is very essential numbers. But we should not forget, here we have as well very important numbers, because we have ARR, which looks lovely. ARR large customer base developing very solid, which is lovely. They're getting very efficient in terms of how they acquire new customers, which is nice because, yes, again, there are still very strong sales and marketing expenses, but we should not forget competition is high, always in cybersecurity space, very competitive. And it looks like they still can lean into it with efficient approaches and, yeah, convincing as well, not just with stuff, but as well with products, you know. So it's nice that these very important numbers are neutral and positive. Then we have mixed blend in terms of the profitability. We have negative experience in terms of the expenses development. And yeah, profitability and stock-based compensation, all of this is a little bit more negative. So this overall, why this was negative to neutral, this one is, I would say, solid neutral. Because again, the green stuff, there is kind of green stuff involved, let's say 50% roughly. And those 50% are very essential numbers, you know. So I think leaving here a neutral rating is very, very fair. And then, so we have so far neutral to negative with a more neutral touch. Neutral. And now we have maybe even the most important one. And that is the future, the full year guidance, really the expectations. And this is simply very, very positive. Yeah, you can see it here. Basically everything is positive. Except the weighted average shares outstanding, which is not surprising actually, but and they will readjust it more I think, yeah. So real the numbers on the bottom line, below the line, you know, will be positive and are already heading in the right direction. And it seems like really Q3 and Q4 are very, very strong. And yeah, that's for sure positive. I mean, and then you can see, I mean, we have a very mixed picture of neutral stuff, but very important numbers are positive at least. Full year guidance, very, very positive. That is very strong. However, it can't fully balance out that revenue and profit, at least in terms of revenue forecast and profits itself, still is neutral negative, yeah. I mean, I really would love, because it would be the first quarter since I'm doing the live streams here that I grant for all the companies I'm invested in, all four, for all the results of Q2, a positive rating. And that was my target for today, but I think I can't leave it like this. I can't grant a positive rating for this result because you have this kind of flawless expectations. I mean, not even considering the price of or the valuation of Rubrik, but especially if you consider the valuation of Rubrik. And that's not flawless. Look, guys, it's not flawless. For sure not. And even though the full year guidance is positive, and that is really, really important for me. And again, here are the details, many of the important ones, stock-based compensation for me is as well important, but many of the important ones, especially like ARR, is positive. Yeah, it's a difficult one. Because ARR is more important for me than revenue, actually, you know. It's a SaaS company, and that is positive, you know. And full year guidance looks positive. So this screen profit's still negative. However, I grant neutral rating. Sorry, I think it's a really solid neutral rating, you know. But it shows that it was not a flawless earnings experience, and there's a reason why the stock market price is lower after hours. Let's check out how low. Okay, it recovered a bit at least. Wait, I need to take a quick break one more time. Sorry, guys, but then we cover the rest what is left. So now I'm back and we must finish it. Let's go, guys. Thank you very much for staying patient. Even though I think nobody's anymore in the stream, however, I will go on now. And yeah, Excel we already covered. Now we check out again aftermarket price, looks solid. Now we check out first market reaction, if there's any first market reaction here on Seeking Alpha investment platform. Something what I definitely can recommend. And let's see what people are thinking about those results here in the comment section. And we start with Stock Scanner. And I can tell you already now that I think, I mean, again, the variation is for sure not low. I think that's very regular for cybersecurity companies compared to, or let's say, considering it as cybersecurity company, the valuation is not the highest one. But I think maybe that might be the game-changing quarter, the second quarter right now, this results. But I think we can really strongly look into the future in terms of Q3 and Q4 and the very successful year. And if you are invested, I think staying invested might be a good idea. Again, that's my take on it. But yeah, who knows how strong the volatility will be in the upcoming quarters. Yeah, let's see. Stock Scanner, what you're writing is just the usual loss and huge stock comp, nothing to write home about. Stock Scanner is you're out of your mind. I saw you suggested that people short the Datadog recently. More bad advice. They beat by over 30 million and almost doubled the EPS guidance. Why also raising revenue guide? What more could you be looking for? It's absurd that this stock is trading down after us, but this is the hedge fund world that we live in. You will likely take a victory lap because the stock is down, all-time high, but you couldn't be more wrong about the company. And 6 people liking this, so yeah, definitely some tailwind for Rubrik. And then ABCDE writing, why do you think the stock down was absurd? Why can't it be after hours? Why can't it be because the $107 tech was overvalued and it is having overreaction to reach its fair value? You can think it's cheap, but it all depends on how you elevate it. Any price between 70 and $110 is normal. This earnings result justifies the 70 till $110 price range. And 97 cent after hours. Now it's $100 is not absurd. Yeah, and I relate to this take really. I think yes, the results itself are not bad, but again, I rate it neutral. But considering the run of this company, yeah, what we can see here, I mean, again, like many software stocks recently and cybersecurity companies especially, but however, considering this run, yeah, it is not surprising that the setback takes place. Yeah, a little bit here and there, forth and back, but nothing that interesting. El Financiero writes solid results. Glad I bought in the 40s, 50s US dollar range. Yeah, same for me. But of course, I would love that they provide even better results. He writes someone, hello SEC. It's SEC. It's crime. The stock is down after hours. Hedge funds suck and should be outlawed. This is not how markets are supposed to work. Yeah, crazy. What nonsense comment. Yeah, nonsense comment. Again, check the details and then maybe you understand why things are like they are. Again, I would not be surprised if, yeah, they're developing better in the future, but as well if they might have some trouble actually in the next weeks. I'm quite confident that Q3 and Q4 really bring some nice color to it, And yeah, in general, let's see how agentic AI demand is developing, how their experience is developing, how identity security is developing, how cloud development is how cloud growth is developing, and yeah, I think for Q3 and Q4 we can be very happy. You know, it's just the start, I think. However, let's check out quickly and take a look at the presentation slide deck. If there's anything very interesting, Net Promoter Score of more than 80 is lovely. Yeah, it seems like customers are very satisfied with it. Even though I don't know how strong that can get manipulated and how reliable this number is, yeah. Subscription ARR, I mean 33%, that is very strong. That is very strong. Cross margin 80%, yeah, okay, good for you. Yesterday, human attackers, human operators. Today, tomorrow, AI attackers, AI operators. And I mean, this makes it very clear. If that's the truth, then we're living in a complete different world in terms of cybersecurity than 3 years ago, 5 years ago. And there are these new boys on the block like Rubrik, yeah? So nothing we should underestimate. Okay, yeah, okay. They just make sure we understand AI is important. And this is what they both do with their agent security cloud, basically AI speed recovery and runtime agent. So if they make sure that somehow the agent based on AI is behaving right, and if it's not behaving right, then they can undo what happened and rewind basically or recover what happened. Okay, now we have a completely new slide. Hello, agentic cyber resilience. That is what they have released, I think, as a really finalized product this quarter. Rubrik Security Cloud and Agent Cloud. So we have two main suites. Here's Identity Security is involved. And here we have Rubrik Platform, Agentic Governance Security, Agentic Orchestration, Data and Identity Context. Okay, no, nothing too new. Data, Identity and AI. Yeah, and that is nice. It looks very simple, but again, that's the message I want to see. I really want to see this ecosystem and people understand it's about data, it's about identity, and nowadays it's even about AI. And then we have this flywheel. Then we have a large total addressable market, which is very regular. Cybersecurity companies addressing too, but yeah, that's not that new actually. But we can see here rapid subscription ARR growth. Yeah, and that is really solid. This jump here was really solid. 33% is really solid, no doubt. And that's a very important number, if not the most important number in the end. Cloud transformation nears completion. Yeah, they go full for subscription and cloud ARR. What you can see here, 89% of it. Some analysts ask question about it, why there is non-cloud, non-subscription revenue and whatsoever. But yeah, you can see it's primarily the case that we're talking about reliable ARR. Cloud net new ARR growth reflects migration largely completely. Okay, calculated cloud net new ARR. Net new cloud. Ah, okay. It's a bit down year on year. Yeah. Is it correctly? Let's see. New cloud net new ARR X migrations. Doesn't look too crazy impressive for me, honestly. Then we have some classic numbers or classic slides. Again, here it was past quarter 120% and Q4 2025 more than 120%. So it's getting down. It's still an impressive number, but obviously would love to see it staying stable. Okay, customer development is heading into the right direction. It's positive for sure. Then we have again ARR year-on-year growth. We have the revenue growth, normalized revenue, and reported revenue. So there are always some material revenues, whatever, which getting deducted. Yeah, but at the end, for me, from my perspective, it was 38%. Yeah. Strong non-GAAP margin. Yeah. Okay. Proof of scale and efficiency. Yeah, the contribution margin, I think, is very impressive. For me, it's as well a quite new KPI, honestly, but again, it makes perfect sense that this cost of sales and sales and marketing getting considered and related to ARR. And it's nice to see that it's really growing very, very strongly. And there's hardly going back from this point on. It will only get better, very likely, you know. Yeah, then we have this updated guidance, of course, and here we can see as well how backloaded it is, very likely. And we expect Q3 2020 to contribute 24% of net new subscription ARR, and the biggest chunk very likely on Q4. Okay, for second half, we expect non-GAAP gross margin to be in the middle of our long-term range of 77-82%. Okay, nothing too special. You can see as well, we expect Q3 to free cash flow 40%, roughly 40.5% of second half, so 60% of the free cash flow. So very likely Q3 will be the so far largest free cash flow quarter, and however Q4 will be by far the strongest one. I think that's the message what you have here. Okay, that's solid. Let's check one more time after hours price. Yeah, and it's -7%, and considering it went up by more than 11% yesterday, everything is right. Is okay. I understand the market reaction actually. Again, I don't think it was the perfect results, yeah. But basically, that was it for today, you know, and that was it for the earnings season. Maybe I think about doing some special streams in the future about some other stuff I want to cover, but let's see. However, guys, as always, thank you so much for staying at this call, staying at past calls if you stayed for sure. If you like what you have seen, please feel free. It would make me really smile and happy, and maybe it makes you smile and happy if you make me smile and happy. If you like the stream, if you subscribe to the YouTube channel, if you follow me as well on the Sense of Capital on Instagram. Yeah, guys, and as always, famous last words disclaimer. I think I forgot to mention at the beginning, but now even make it more clear. In the past, how long was it? 2.5 hours roughly. No financial advice, no consultation, yeah? There's no guarantee for correctness of the provided data. It's your own decision, your own life. You need to live with your investment outcome and the results of it, you know? So make sure you do your due diligence and not listen to me or whatsoever. I just share here my personal opinion as an amateur, as a regular private investor, and I'm not an analyst or whatsoever, guys. And of course, final last words, take care of yourself, take care of your health, take care of your beloved ones. Your health and social environment always way more important than financial power, you guys. So yeah, stay healthy and enjoy the life, whatever this means for you. And guys, thank you very much for joining. Thank you very much for liking and everything. And yeah, hopefully see you next earnings season, Q3 2026. Cheers and bye-bye. A sense of capital.